It's a brutal sell-off and it's across the board. So metal names, financials, technology, all are under pressure.
It was another cringe day for crypto. Digital currencies sold off again today with Bitcoin closing back in on the 20,000 mark. The flagship crypto has plunged nearly 70% from its all-time high last November. Meantime, Ether sits nearly 80% below its record high. So where's the bottom line?
This has been one insane weekend. The sell-off in the crypto market has deepened a lot. The ship has drowned in deep waters with $7.3 billion in losses locked in by Bitcoin investors, who offloaded coins they had acquired at higher prices. The economy is in a bad shape, and things are only getting worse. Inflation, interest rates, liquidation, everything is just rising and rising. Even mortgage rates saw their biggest weekly jump since 1987. There's no question that everyone is in panic, but is this just a short-term blip or something more serious? In today's video, we'll take a look at the evidence of what's happening in the crypto market. We will cover what Michael Saylor has to say regarding the Bitcoin and the crypto market. So stay tuned to the video. And if you're new to the channel, be sure to subscribe for more videos on the crypto market and economy. Let's now dive into the video and hear him out.
A rational strategy is dollar cost averaging into scarce, desirable assets that, someone that's more affluent and more informed than you will want to buy from you in a decade. So if I was trying to come up with a plan to manage through the chaos, like I don't know that I could time the market. I think that I would just kind of dollar cost average my cash flows into a portfolio of property that was scarce, that was desirable, that would hold its value. And with the caveat that I need to be able to afford to maintain it. So if I could buy high quality property that I can afford to maintain for a decade, then as cash flows arrive, I would just allocate accordingly. And if you like Bitcoin, then Bitcoin, just dollar cost averaging into Bitcoin is a similar thing to that and rational. I think a useful chart is the 4-year moving average chart. I think if you look at the 4-year simple moving average of Bitcoin, it kind of reflects something synonymous to the book value of the network, because for 1,458 days, that number reflects the trading volume or the trading price of Bitcoin. So it's traded billions of dollars a day, 1,458 times. And so by the time you calculate that number, it typically lags the overall price, but it's gone up consistently for the history of the asset, for obvious reason. And right now, that number is, as of today, it's 21,705. So 21,000 and change. So Bitcoin is kind of touching that number.
Well, that's good.
And if you're a dollar cost averager, a conservative Bitcoin investor, I think that you would look at that and think, yeah, I mean, well, for obvious reason, Bitcoin hasn't looked this cheap since March 20th of 2020. Like that was the last time when it touched this. And then you got to go back to like February of 2019. And then you got to go all the way back to 2015.
According to Michael Saylor, a rational strategy for investing is dollar cost averaging assets that are both scarce and desirable. He also pointed out that Bitcoin value has not touched this low since 2020. I mean, Bitcoin suddenly plunged below $20,000 on Saturday, with thin weekend trading volume sparking new depths of 17,700. This has not happened since 2020. For some investors, this has been a cause for big concern. On Sunday, Glassnode tweeted a series of tweets and warned the past few days had sparked the biggest dollar-denominated realized loss in Bitcoin's history, with $7.3 billion in losses locked in by investors who offloaded coins they had acquired at higher prices. Short-term speculators were among the first to dump their holdings, but this time around, according to Glassnode, even long-term holders liquidated around $178,000 of Bitcoin at prices below $23,000. I mean, just imagine buying Bitcoin for $69,000 and selling for $18,000. That's like locking in 75% losses. My head spins even imagining that much loss. The company has also warned that the conviction of investors is seriously being put to the test right now, and when BTC touched 17,700, just 49% of BTC's supply was in profit. Historical bear markets have bottomed and consolidated with between 40% and 50% of supply in profit. Glassnode added. If you found this video informative, please like and share it.
If you look at the near term, Bitcoin looks like a volatile risk asset in the near term. And if your time frame is near term, if it's a high frequency time frame, then you kind of got to trade Bitcoin like a high volatility risk asset, or an amped up risk asset. And if you're a low frequency, long-term trader, if you're buying it with expectation that a decade from now, it'll be worth more. Now it starts to look like a store of value, non-risk asset because there's no management team, there's no product cycle, there's no employee base, there's no competitors. It's not a company. It's got no nexus. It's not in a country. It's not land. You can't produce more of it. It's a different thing. So depending upon whether or not you're short time frame or long time frame, you see it differently. And I think that in the near term, it's pretty clear it's a risk asset, and the Federal Reserve is going to control all the risk assets. And so when they squeeze the money supply, all those assets, the tech equities, the Bitcoin, they get hammered down.
Michael Saylor agrees that Bitcoin still has a lot of volatility and risk when considered for a shorter time frame. Michael Saylor also points out that the Fed's control over risk assets means that their take on money supply will have an adverse effect on Bitcoin in the short term. The start of this week was a bit hopeful. When BTC hits highs of $20,000 after a remarkable turnaround on Sunday and Monday. While the near-term outlook for Bitcoin is uncertain, Michael Saylor believes Bitcoin could be a good investment for those who have longer time frames and are willing to take on more risk. Still, right now, the market is full of fear and uncertainty. What are your thoughts on all this liquidation going on in the market? Do you believe that long-term traders will start selling off more and more? As always, I'd love to hear your thoughts in the comments below. And for more videos on market's latest update, don't forget to subscribe. Also, hit that bell icon to never miss any video. I'll see you all in my next video. Adios!